Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate finance, and today we're diving into Boyd Gaming's latest report. Get ready because this one has some major moves, including selling off a significant piece of their online betting pie and a whole lot of cash coming back to the company, which looks like it might have a big impact. Before we start, if you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where you can chat with us and other finance enthusiasts. Alright, let's get right into Boyd's latest report for the quarter ending the 30th of September 2025. This filing is essentially a checkup on how the company is doing financially and what its plans are. First up, the condensed consolidated balance sheets giving us a snapshot of their assets, liabilities, and equity. At the end of September 2025, total assets were over $6.5 billion. Now look at their cash and cash equivalents, a little over $319 million for the current period. That's up only slightly from the end of last year. They also list restricted cash, which is money they can't immediately use for operations. Their accounts receivable, however, saw a pretty significant drop from $132 million at the end of December 2024, down to just over $82 million at the end of September 2025. This could mean they are collecting on past dues more effectively or potentially selling fewer services on credit. A line item that stands out is other assets at over $176 million for September 2025. Interestingly, the filing notes that $83,754 of this relates to variable interest entities, which are essentially companies they have a stake in but don't fully control. This number has more than doubled from the end of 2024. Now let's talk about liabilities. Their long-term debt saw a massive decrease from over $3.1 billion at the end of 2024, down to around $1.89 billion by September 2025. This is a huge change and points to some major financial activity. On the equity side, retained earnings saw a massive jump from about $1.58 billion at the end of 2024 to over $2.66 billion by September 2025. This huge increase in retained earnings, coupled with a significant reduction in long-term debt, strongly suggests a major financial event, likely the sale of an asset that brought in a lot of cash. Moving over to the statements of operations, which shows how much money they made and spent. For the 3 months ending the 30th of September 2025, total revenues were just over $1 billion, which is an increase of about 4.5% from the same period last year. A big driver here was online reimbursements revenue, which jumped by $35.5 million. This revenue stream relates to reimbursements for gaming taxes and other expenses they pay on behalf of their online partners. While this boosts revenue, it essentially has no impact on profit because they are simply being reimbursed for costs already incurred. Gaming revenue also saw a healthy increase of $16.8 million for the quarter, driven by more money being wagered and won on their slot machines. However, operating income for the quarter actually decreased by a significant $80.2 million. This might seem counterintuitive given revenue growth, but the report details a massive $65.1 million increase in impairment of assets. Essentially, they wrote down the value of some of their property and equipment. Also, the online reimbursements revenue, though, looking like growth, does not contribute to operating income because it's offset by expenses. But here is where things get really interesting. Net income for the 3 months ended the 30th of September 2025 was a staggering $1.43 billion, a massive leap from just $131 million in the same period last year. This huge jump in net income is directly tied to a gain of $1.74 billion from the sale of an investment. Looking at the context provided, this sale refers to the divestiture of their stake in FanDuel. They also saw a significant increase in their income tax provision, which is normal when you have a large gain. The 9-month period shows a similar story with revenues up nearly 5%. The big story again is net income, which soared to $1.7 billion for the 9 months ending the 30th of September 2025, compared to $407 million last year. This is overwhelmingly driven by that same FanDuel sale. Now let's touch on their capital structure and financing. Their long-term debt has been significantly reduced from over $3.1 billion at the end of 2024 to about $1.9 billion by September 2025. This significant paydown was partly due to using the proceeds from the FanDuel sale to pay down debt. They still have substantial amounts in their senior notes due in 2027 and 2031, which represent a considerable portion of their outstanding debt. Looking at their cash flow statements, we see that their operating activities generated consistent cash flow, around $701 million for the 9 months ending the 30th of September 2025. However, their investing activities show significant activity. Capital expenditures were around $440 million for the 9-month period, reflecting investments in property renovations and new projects like the Norfolk casino development. Crucially, their investing activities also show a $1.758 billion inflow from the sale of an investment, the FanDuel stake. This is the massive cash inflow we saw reflected in their net income and debt reduction strategies. Financing activities show a net outflow of nearly $1.9 billion for the 9 months ending the 30th of September 2025. This is primarily due to that significant debt repayment we talked about earlier. Looking at their segment reporting, it seems Boyd Gaming is organized into 4 main areas: Las Vegas, Locals, Downtown Las Vegas, Midwest, and South, and Online. The Las Vegas, Locals, and Midwest and South segments are their largest revenue generators. They also present adjusted EBITDA, a measure often used in the gaming industry to show profitability before certain non-operating items. For the 3 months ending the 30th of September 2025 total reportable segment, adjusted EBITDA was over $321 million, a slight decrease from the previous year. The significant impairment charges we saw impacting operating income are clearly a major factor across their segments, particularly in Las Vegas, Locals, and Midwest and South. The online segment saw revenue growth driven by acquisitions and reimbursements, but the report notes margin pressure due to changes in market access agreements. Now, looking at these results more broadly, Boyd Gaming has made a very strategic move selling their FanDuel stake. This injected a massive amount of cash that they've used to reduce debt significantly and boost their retained earnings. This strengthens their balance sheet considerably. However, it's important to note that the massive net income jump is largely a one-time event from the sale, not necessarily indicative of ongoing operational explosion. Their core gaming operations continue to perform steadily, especially in the Midwest and South regions. The impairment charges, especially in property and equipment, are a concern and suggest they might be re-evaluating the value or future prospects of some of their assets. The online segment shows growth, but with margin concerns, which will be key to watch. Overall, Boyd Gaming appears to be strategically strengthening its financial foundation, while navigating some operational headwinds and looking for future growth opportunities. Will they reinvest this cash wisely in new ventures, or continue returning capital to shareholders through buybacks and dividends? Their path forward will be shaped by how they deploy these resources. Alright, that is our breakdown of Boyd Gaming's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.